How's it going, everyone? In this video, I'm going to tell you all how to identify this type of high probability trade, how to manage this trade, where to enter, where to get out. But as always, before we get started, be sure you subscribe to my channel, click the thumbs up button, and click that bell icon so you don't miss out on any of my upcoming videos. Let's get right to this. We're looking at SPY here, ticker SPY, it's ETF. I love trading this using options. A lot of Team Bull members trade this. We do really well with this. Some people just trade SPY and QQQ all the time. That's all they trade. Nothing wrong with that. But anyways, this is a retest. This can be to the upside or downside, but in this particular example, this was to the downside. Now let me zoom out here. We're looking at the 5-minute chart. You can see here, this is pre-market low. Back here is pre-market. This is the opening 5-minute candle. We broke down below pre-market low here on this candle, the second 5-minute candle. I watch a 5-minute candle until I get into the trade. Then I pull up the 1-minute and 5-minute. Anyways, we could have scalped this. We could have got in, took this scalp down. But remember, anytime you break through support or break through resistance, it's high risk. It's higher risk trade. What I like to do, I do take the breakout trades because I can manage my risk really well. I'm really fast at trading. I have a good setup on Thinkorswim. I have a video showing you how to set that up as well. But what I like to do is wait on a retest. And this is how I took this trade. I called this trade out inside Team Bull. Now let me walk you through this. First off, we have that move down. As you can see here, we're extended away from this white indicator, which happens to be my 9 EMA. So I know we need to come back to it. We kind of chopped around, consolidated back to this. I took an entry off of this 9 EMA here. For one, I could see selling volume was dying down again. I could see buying volume was dying down again. So I seen some sellers step in here. I got in this trade right at this retest of that pre-market low. Got in, had a nice move down. I trimmed my first run. I trimmed half my position, a little bit past the 10% mark, but I left some runners. This turned into a really nice trade. I'm happy with my execution on this. Now you say, Grizzly, where should I get out of this trade completely? For me, I would have the 1-minute put up alongside of this. I would simply watch for a candle or two to open above the 9 EMA on the 1-minute, or right here when you seen the selling volume dying down. That would have been a good place to take the remaining profits. A very nice trade. Those of you that's familiar with options trading. So if we got in this trade, let's just say we got in right here at pre-market lows at 374.5. And we stayed in, let's say we stayed in to 373.3. That's a good trade. The contracts on SPY, they move really well. The spreads tend to be good. So you're looking at, $50 plus per contract on that trade. Depends which ones you grab, how far out of the money. And that's basically what I look for high probability. The reason, there's different types of trades. There's bounces, rejects. If you want to stay away from the risk, I recommend staying away from these breakout trades like this breakout here, or even here, a breakout here. That was higher risk. You always want to wait on the retest, and volume will tell the story. If we come up here and retest and I've seen a huge increase, let's say a big green candle's coming up, chances are I'm not going to try this retest because it's just going to blow back through that level. It could even possibly come up in orb. Volume is key, but let me explain to you. I like to see 3 things that are telling me to enter a trade before I take it. In this instance, we have that retest. We have that 9 EMA setting right there at that retest level that just added to my confidence. We had buying volume dying down as we retest this area. Now, the same thing applies for a breakout to the upside. Let's say we broke out to the upside. Let's say we broke above this pre-market high like we did here. Say you're waiting on this breakout. If you take the initial breakout, it's higher risk. Wait on that retest. And when you're waiting on retest, when we break through resistance, when you're waiting on that pullback, what you're looking for here is simply a decrease in selling. A decrease in selling volume, and preferably we have that 9 EMA setting close to that level. Keep in mind, if that 9 EMA is right below that level, it could pull back to that before it pushes off. So a better entry may be off that 9 EMA instead of that pre-market highs. But volume is key on all of these. You want to see a decrease in selling volume when you're trying to take a bounce, or when you're trying to take a reject, you want to see a decrease in buying volume. Again, 3 things working in your favor that just adds to the probability. This is not bulletproof. If the market turns around on you and you break it back above this pre-market low, you can just simply get out when you have a couple candles open above the 9 EMA on the 1 minute time frame. Or if you have a big push up on the 5 minute, you know, hey, it's time to get out. No matter what happens, always follow your trading plan. If you have a max stop loss of $300, you stop out at $300. I feel a trading plan is key to being a disciplined and a profitable, constantly profitable trader. So, but yeah, that is basically it for this video. If you have any questions about it, I did my best to bring that out as I was, as if I was in a trade. But if you have any questions, feel free to reach out to me. And as always, I appreciate you all for watching.